My name is Max. I work at WM Data. We're a national numbering agency, so we issue ISINs in Germany. We're the golden source for securities reference data in Germany. So I don't know if you noticed, we caught some strays earlier. Anybody who needs an ISIN and who is struggling, approach us. You can talk to us. I'm here joined with, I think, a perfectly diverse panel of TradFi people, of crypto native people. So starting from my left, I think I have Hartmut Giesen here representing Sutor Bank. Sutor Bank is a German private bank founded, I believe, in 1921. And they are offering crypto trading services in a B2B context since, I think, 2020, if I'm correct. 2016, so even earlier. So they're really innovators here. Yeah, amazing. Next to Hartmut is Dr. Carloa Rathke, who jumped in spontaneously this morning. So thank you very much for that. Carloa is partner at YPOG, which is a law firm specializing in tax and business law, and she's leading the kind of crypto and DeFi law firm there. You might have seen them from being the first to receive a number of licenses for their clients, for example, the DLT pilot regime license for 21X. Other clients included Coinbase in Germany with their custody license, for example. Then we have Dr. Steffen Härting. Steffen has a doctor in mathematics. He's an ex-quant trader. And he is now senior manager at Deloitte for crypto assets market. And then last but not least is Eva Lawrence. She's head of EMEA at Figment. Figment is a crypto staking platform for institutions. I believe they're the largest independent staking platform for institutions. So they have about $15 billion in assets staked on their platform. So we're here to talk about DeFi and TradFi. So I guess carrying on a little bit from the Mika discussion into actual applications to see how banks and how crypto players are working together. And I'd like to start with a, let's say, maybe slightly provocative question. I don't think we need to go in order. Everybody can just answer if they feel like they want to. So DeFi, gets touted a lot for being truly innovative, offering new financial products. But the question I really want to ask is DeFi, decentralized finance, is it really innovating new financial primitives, or is it really just kind of taking what we know in TradFi and then just rebuilding it on chain? What do you guys think?
I'm happy to go. I'd say it's both innovating and replicating. I think in crypto, we love to take a new concept and say, oh, but it's just like X, insert TradFi example here. And I think, while we do see in DeFi concepts like, trading, derivatives, lending being taken, they're being taken and improved upon, right? We're looking at how we can make them accessible, permissionless, open source, and to improve those products. So you have the traditional mechanisms and taken on chain. And I think what we have to be careful in when we're talking about DeFi is that we don't just try and take DeFi and shove it into and insert it into TradFi. What we want to look at is the innovation piece, and that's the part that we should be focusing on, but there is still that replication piece.
I think the same. Actually, we have the same products. We have loans, we have securities or tokenized securities. We have funds, and but what is changing with DeFi is the infrastructure behind the products, meaning the front end, some kind of the same user interface, but we have another infrastructure, or perhaps we will have another infrastructure, more efficient, cheaper infrastructure with less counterpart risk in the background. I think this is the bigger part of DeFi.
That being said, I agree. There are some things that, the point is like, what is DeFi? What is decentralized? And when we say it's fully decentralized, it also means zero trust. So some things, from my perspective, we might not be able to replicate it fully, which is the trust, because it's zero trust, which means also creditworthiness. If you don't know, you can't lend. You have no trust. You can't give a credit line, for example. So there's some things which I see in traditional finance, which I don't see them very, or at least at the moment I can't imagine them on DeFi and the other way around. So I think it's not exactly the same, and you can't just replicate everything, but you can replicate quite a lot, which you can't replicate is from my perspective, like trust, credit, and order books right now. Yeah, so yeah, you can, but it's super slow and nobody wants to trade it.
Yeah, that would be exactly also my perception, that there are, of course, things that are new. So if you talk about native crypto coins, of course, that's new. So these crypto assets, they will not be replicated. That's new. And they had, of course, a strong impact on the overall development of the technology, as you said. And in the technology, yes, it's an enabler, but it's not always everything new. Actually, when you advise crypto companies, they come up with, oh, I have a great idea. And I say, oh, nice, it's a derivative, so it's nothing new. But the way it is traded, what you guys say, it's about automated market making, the mechanisms are different. So the BNL, so borrowing and lending products are different. So there are new mechanisms that are enabled by the new infrastructure, which is great. And so it kind of drives improvements also in the TradFi world, because, I mean, if we talk about settlement things, so this instant settlement that is possible in this environment, now we talk about T+1 settlement in the US, and it comes over to Europe. It's not T+2 or T+ whatever anymore. And I think this is really driven by this new technology, because otherwise we wouldn't have it.
So that's definitely something that I want to go into, is the influence that maybe the infrastructure is also having. So the new crypto DLT infrastructure is having almost like a second order effect on TradFi, where TradFi feels like it needs to be catching up. And then on the derivatives front, I do think there's probably some value in saying that it's a financial product that has existed in traditional markets, but not for me. Like, it's existed for institutions to use. It's maybe not existed for a retail customer to kind of go for. Sure, go ahead.
Yeah, I like CCP, yes, but kind of derivatives might be its bond obligation style, but it's a type of, it has characteristics of a derivative from a trading perspective. So they have existed for retail customers as well. But yeah, in some sense, I agree. But also, it's also not a new concept.
That's okay. I mean, I like panels where there's discussion. So.
Yeah, of course, that's why we're here.
I think normally you have no access to products that the regulator don't want that you have access to this financial instruments, and this won't be changed with a decentralized approach, I think.
We'll see. I mean, on that point, you know, there are some DeFi protocols that have definitely also managed to work together with TradFi, right? And they've attracted institutional capital, maybe even so while also being open to retail. And often it's in a changed form. So maybe it's a protocol that exists in one way, and then they've added some additional whitelisting or some KYC kind of stuff, right? So would you say that's really TradFi breaking the DeFi spirit, so to say, or it's the other way around, and maybe DeFi is starting to slowly kind of step by step coax the traditional financial world into coming on chain and kind of experiencing everything that's going on there?
I think there are influences vice versa. So I wouldn't say it's just one influencing the other. They are both kind of influencing each other. And I think they are merging. So if you see kind of the CASP, so the crypto asset service providers that are kind of starting to look into tokenized securities and other asset classes, and the other way around. So the traditional banks that are now kind of thinking about or having initiated already their crypto offering. And therefore, I think they are kind of coming closer to each other. And it's a mutual influence from my perception, at least.
Yeah, partnership is what I was going to describe it as. I think you've got the DeFi side, which is taking, you know, inspiration, shall we say, from TradFi's regulation, policies, procedures, the structure around the TradFi industry. And then on the DeFi side, you know, the TradFi institutions are saying, okay, well, this is what we can achieve on chain. I'm hoping what that doesn't result in is, all of hundreds and hundreds of permission blockchains out there. But I think what we'll see, is hopefully more development than just that. I think one example would maybe be the work that JP Morgan are doing around Onyx. Again, is that DeFi? Not really, in my view, but it's progression. And I think, that partnership will grow and develop over time, but it's not going to be overnight. Suddenly all of TradFi looks like a new blockchain protocol.
They can't. I mean, they're regulated, so it's impossible. And actually, the point is like, if you're saying like, oh, it's a permission contract, it's a permission blockchain. I mean, I'm sorry, maybe I'm repeating myself, but is this decentralized?
I agree.
Yeah. Is this like the technology might be somehow decentralized, and even if you have a decentralized technology, you still have this whitelisting entity, which is centralized. And if you would ask the regulator, he or she, I don't know, might maybe agree that this might not be fully decentralized and would maybe fall under MiCA then. So if you turn it the other way around, it might be that the regulator even would agree with you, because they might, under certain circumstances, consider it to be MiCA.
Agree.
I think in finance you have to see what the customer would like to get and what the regulator would like to accept. And in this sense, DeFi, for real mass adoption, DeFi has moved in the direction to TradFi or to regulated RegFi perhaps, and vice versa. What we already said, TradFi has to develop new products that attract new customers, and products with some decentral elements attract other customers than the customers they already have.
So products is a very good thing to pinpoint there, and this whole regulation, MiCA, is it MiCA regulated, is it MiFID regulated, this kind of question, because what we're seeing also is that, traditional finance is taking, like, let's say Bitcoin, I'll say it's decentralized, probably we can all agree on that, judging by your tie, I would say.
It's both more decentralized than the other ones, I would say.
So let's take that as an example. That is typically the first asset that gets wrapped in a traditional product, like an ETP or an ETF, right? Where you're effectively taking something previously unregulated, pulling it into your regulated world, and then building, kind of making it fit into your world. But the underlying asset, right, is still DeFi. So do you think these kind of products are built for the future, or is it something like training wheels that will eventually come off and will move on to really just handling the native products?
I love this question. I could talk for 45 minutes just on this question. I won't, though, don't worry. I think it's super interesting. I think that, when you think of ETP products, right, they are the gateway to crypto for many people. But I think there's this view that, well, it's one or the other. Either you hold the underlying asset or, you buy an ETP product. But that's simply not the case. For some people, they want access to crypto, but they don't want to set up a wallet. They don't want to have to swap one token for the other. They don't want to have to trade on a DEX. They just want a simplified access route to crypto that is a tested wrapper, has some tax benefits in some cases in some countries, and so an ETP is a great gateway into crypto. I think what it doesn't necessarily do yet is give a gateway into DeFi as such. It's more of a gateway into crypto, and in an easy and accessible manner that anyone can do. But what I think we have to be careful with is we see these products going out to retail investors, obviously institutional as well, where they are incomplete, and the end client is actually not getting the benefits they would have if they'd done this themselves. So for those who are trying to protect consumers, you're actually making the consumer worse off. So for an example would be, an ETP product without staking. If you have an ETP product without staking, that is a worse product, right? Than if you went and bought the ETH yourself and staked it, via your custodian, via your exchange. So I think, as we go out and we offer these products, or we see these products being offered, yes, they're a great starting point, but let's not confuse them with, DeFi offerings, and let's try and get to a place where DeFi is available to retail and users, and they're not suffering because we don't want to put something in this wrapper because there's uncertainty around it.
Or you keep the staking yields for yourself.
Well, exactly. At least in Europe, we're a little bit more progressed on that front, and we do see ETP products with staking, and we're very fortunate for that. And hopefully, the US catches on soon too.
But then it all comes down. It's okay. Then it all comes down to regulations and tax as well. Because if I make quant trader I have one. I'll give you an example. One strategy which is a combination of DeFi. I'm not running it because it's basically the problem is tax. So it has staking, it yields. It has the coin returns. It includes a derivative. And it includes an additional service which is performed using something that comes out of the staking. These are 4 different tax buckets in Germany if I do it as a private person. And I can only lose because I will pay more taxes. And this also is a thing. And actually, if you put this in an ETP, that would be a very big benefit, honestly, because I don't really want to pay more taxes than I have gains. And this is why I think this might actually stick around, ETPs, unless the tax would be simplified, which could be, could not be. I think everybody has his or her own opinion on that. But at the current setup, a private person, for them, it's really, really complicated to run such a strategy in DeFi.
So if I understand you correctly, go ahead, I just want to make sure. So you would say that you could see ETPs becoming more complex as more complex strategies are wrapped into ETPs, kind of in the crypto sense.
Yes, because as a private person, running that is insanely complicated from a trading perspective and from a technical perspective. I mean, we're all in crypto, but I don't really think that 95% of the population would be able to trade DeFi in an easy way. It's like Linux 2005, like nobody really knew how to handle it except the specialists.
95% aren't even trading anything at all, so yeah.
I think that's exactly my point, what I would say. So we are here in a kind of bubble and everybody kind of has a nano ledger or a MetaMask and whatever. But I think 90-something% don't have it. And therefore, I think exactly it will probably remain. It's a bit like in the past, do I think that there will be portfolio managers in future? Yes, because people are not so educated and do need the help and support. So not everybody will has its own wallet and control over all the assets, be it in the crypto sector or in the security sector. So I do think we will see a vast variety of use cases on that side. And so the products might change, but is there still the need in future? Yes, because we still have undereducated people in that sector, which is fine because no one or none of us, or not the people in the room, yes, but outside don't have the sufficient financial education. We are already talking about sufficiencies in Germany when it comes to security. So, I mean, we have to go a step further when it comes to crypto. So I think that's the reason why I think, yes, the products will remain for a long time.
I think we saw some in the past some startups out of the DeFi area that tried to build mass or retail customer products, but they failed. And I think at the moment it seems that we need some kind of TradFi wrapper around DeFi products for mass adoption. So far, as I can see, there is no real, no DeFi product which real mass adoption.
I mean, I think it would be
Bitcoin perhaps, or other bigger cryptocurrencies let aside, but real, nobody goes to a decentralized exchange or make a loan with a smart contract. Yes, in the bubble, but not a normal retail customer.
I mean, I think it's a mistake also to act as if decentralized financial systems and venues and protocols are less complex than the actual TradFi system, right? So, you know, both things can be quite complicated. But I think it's interesting. So two views here, right? On the one hand, the view that actually we will just start wrapping more things to make them more accessible. I mean, if I understand you correctly, you were saying it's kind of more of a gateway right now, which to me would sound like maybe it's not a gateway to crypto, but just a gateway to exposure to the price action of crypto, right? So I guess the question is also there, where do we want to, or what is the vision? Where do we want to get the system to go in the end?
Yeah, I think it's also the fact that it's not a one or the other, right? You can hold an ETP and hold, you know, and trade on Uniswap, right? You can do multiple different things. And I think that I don't think we'll end up in a place where it is just everyone only purchasing exchange traded products or everyone just, you know, buying on trading on a DEX. Like, I think it's always going to be a mixture, and that's what's needed in the market. It's a gateway for some people, but I don't think it's either or.
So let's talk about DeFi a little bit more, also about infrastructure there, and I think that's always an interesting comparison. So usually when we talk about, you know, capital efficiency, risk management, market efficiency, TradFi will say we're way better at that. DeFi will also say we're gonna be better than that, or we're on our way to getting better, right? And I'd love to hear your take on that. If you think there's a model that's kind of gonna prove superior, because I guess in TradFi, typically you would say, well, there are more intermediaries, right? For example, on DeFi, you could argue there are intermediaries emerging there. It's just kind of new ones, maybe. So I'd love to get your views on that specifically.
I think everybody who knows what have to happen when you buy an ETF, for example, in the background, would recognize where is the efficient potential for decentralized or for blockchain-based capital market. It's a no-brainer. The problem is that you need so many parties to agree what is the truth, what is the blockchain. But I think this is the we will see that we have a blockchain-based or a decentralized working capital market in the longer future. Perhaps not decentralized products, but the decentralized infrastructure behind the capital markets, I'm sure.
I mean, ETFs is an interesting point, right? And it's ETPs also, right? If you look at them, there's a lot of participants that as a retail investor, you never see. I mean, beginning from authorized participants and so on. But I would counter that by saying that, you know, if we look at ETFs in particular, and we look at the way they extremely efficiently kind of find prices. If you look at the Bitcoin ETFs, right, when they launched in the US, there was like a huge discount to NAV on the Grayscale fund that, like, you could watch it disappear when it launched because the prices were being arbitraged.
ETF was only an example for securities. The security trading infrastructure is very complex, and there is a potential to make it less complex with the blockchain or with other decentralized innovations.
I think you could say, you know, TradFi have the head start here, but DeFi is catching up. So market efficiency, of course, we could clearly argue that DeFi are taking the lead here, 24/7 trading. You know, it's permissionless to some extent, or it should be to most extents, and you know, accessibility to all. So if that's market access, you've got DeFi taking the lead. Risk management, I mean, TradFi have years and years of experience in terms of frameworks, procedures, policies, internal structure. But then you can also counter that by looking at, you know, what we've seen on in the banking sector over recent years. I'm not sure if anyone here is from a Swiss bank, but I'm sure they have lots of stories they can tell you on risk management. And then we've seen growth in the DeFi space with oracles like Chainlink and Pith, looking at, you know, risk management, there. So that is growth of DeFi catching up to TradFi. So I think although TradFi have this head start, the innovation in the DeFi space mean that gap is closing.
I think it also depends how you define risk management. When we say counterparty credit risk, if we are only going for a like a DEX spot without any wrappers and rug pull risk and stuff like that, fine. I get the point with counterparty credit risk, but also when it comes to market risk, I will never forget Terra Luna. I'm sorry, this was faulty by design and code is law. It's all good, no credit risk, but
it's a Ponzi.
That yes, so it was no credit. It was not credit risk. It's actually that the reserve was just losing value. Yeah, and then the pack broke, and then this circle of doom. This actually is something where I really have to say DeFi is a bit behind, as I completely agree. So it's not really risk management. It should be risk management by design. But as we know all from TradFi, it's not like you know everything right when you start, I don't know, your startup, a bank or whatever. You learn. And this adaptation process is something that is a bit more difficult in DeFi. Because updating and DAO and voting and yeah.
Would you say kind of one of the benefits of DeFi is also then the Achilles heel, the coder's law, as you mentioned, is something that is on one hand a benefit, but then there's also kind of a negative if you're looking at that angle.
Yeah, sure, of course. I mean, if let's just say if they find the bug, it's Superman robbing a vault. It's like you can't stop them anymore, unless it's what they steal is not really the asset itself. Yeah, fine. And then you can blacklist and you can say it's void. But if it's the asset sui generis, if it's like the asset itself, the value itself is on the blockchain stored, yeah, it's gone. Or you, I don't know, Binance chain, you just call all your validators and try to roll it back. But then I doubt the decentralization again. Yeah.
Yep.
But what I think is interesting, you see that there is nevertheless an appetite for some kind of risk management in the end. So it will probably be deployed differently because due to technology issues. But in the end, if you see the movements, it kind of has same issues. So they are kind of handled differently, but the appetite for risk management, some kind of AML kind of issues that people want to ensure, etc. So there are same basic ideas that probably will be deployed differently due to kind of technology issues. But when you look about smart contracts, for example, which is a bit not native coins, but you have these smart contracts audits now, people want to be sure that the ERC20 token, or whatever kind of token you have in the end, does what it's supposed to do. And there's also an appetite. It's a smart contract, it could be deployed, but people want to believe that exactly for the reasons, it's a risk management issue, because in the end, if you deploy it, you cannot take it back, and therefore you want to be sure that the token does what it's supposed to do. And so here again, I see that there are different ways to achieve it, but the basic ideas behind are not so different actually.
Yeah, and I think another example is there's also insurance now available, right, against smart contract risk, for example, all of that. So maybe if we take a step back, you could almost look at it like DeFi is, let's say, innovating on a new infrastructure and initially really stripped away a lot of what was going on in TradFi. Now, I guess the ideal vision would be adding back the things that are really necessary, hopefully not adding back too much. But this kind of simplification process obviously takes quite some time. I think looking at the time, so I have one question I want to ask you guys now, and then if you're fine, I'd love to just give it to the audience to see if they have anything they would like to add. From my perspective, let's say, 10, 15 years from now, if we look into the future, how do you think DeFi infrastructure and TradFi infrastructure will have converged? Are we just going to have TradFi, let's say, on DeFi on blockchain rails? Is it going to look the same for everybody here? It's just kind of with a new veneer of blockchain, so to say? Or maybe is it going to be a bit more the other way around? Where do you think we're headed? Like, take today, imagine we're here in 15 years. What are we going to be talking about?
I think the end game, in my view, is that DeFi becomes invisible. right? So TradFi is running on DeFi, but the end user doesn't know, doesn't realize it, like TCP/IP, right? It's there, you know some concept of how it's working, but you're like, okay, I don't care. I don't care what's going on under the hood, but it's the DeFi rails underneath it. I think if that's possible will depend on two points that we've touched on today. The first one being regulatory clarity, right? Is there regulatory clarity around the DeFi space and around how TradFi and DeFi can partner, can converge? And the other one is, UX. How easy is it? How intuitive is it for, someone to use those DeFi rails? At the moment, it's very clunky. It's not easy. It's not straightforward. It does take the technical knowledge that we've discussed today. So I think as soon as that becomes easy to use, intuitive, and that UI and that regulatory clarity are solved, then I think we'll get steps closer to having this convergence and having DeFi being there under the hood.
And I think just one point to add, it's about also latency. So it's a bit about how quickly you can trade, because I think that's the last point that still differentiates a bit TradFi from DeFi, because of course you can have autonomous or instant settlement, but nevertheless, if you need to build a lot of blocks and this takes time, this is way slower still. I know there are a lot of things going on also on Google Clouds, etc. We all know the projects we are sitting here, but nevertheless, I think that's on top of what you just said, a third point that needs to be kind of moved forward, but we talk about 10 to 15 years. I think this will be solved, definitely. But this is also one important point that needs to be achieved in order to really use it for all kind of tradings where milliseconds are important. And I think currently we don't talk about milliseconds. Of course, we use therefore layer 2 blockchains to be faster overall, but nevertheless, in the end, there's always a connection between layer 2 and layer 1, and I think this still needs to be solved in order to be in the same ecosystem as currently the TradFi.
It's the same, I think, what you already said. TradFi will run on DeFi infrastructure mainly, but I think there will also, we will see also some unique DeFi use cases at the end. Bitcoin, I think, remain a DeFi use case. Also, other use cases, perhaps, I don't know, currencies that will be used by people in underbanked countries, or where the state, where we have failed state. So I think there DeFi can provide valuable use cases which we don't see here in our world. And I think this kind of edge cases or use cases, or the edge use cases, will remain original DeFi use cases.
I would not say that the whole financial world will run fully on DeFi, but I fully agree that there are certain parts which will most likely run fully on DeFi. Or let's say maybe not DeFi, but maybe on the blockchain, I would say, yeah, or like, because especially like one example is exactly your example, like speed. What's the reason why we have good bid-offer spreads? It's okay, there's the market thickness and market cap and everything, but it's also connectivity. If you look at the specification of Deutsche Börse, we're talking like milliseconds. It's like parts, it's behind the comma. Yeah,
of course, yes, definitely.
And order books are something that I currently don't really see on the chain. Maybe will be a really good technical development. And yes, Solana has an order book on the chain, but it's like super slow compared to what we actually see, what Deutsche Börse specification for, as an example, is. And this reduces the cost for the client when it comes to the bid-offer spread. And then the combination is basically taking the best of both worlds, like putting the settlement on the chain, cheap, and order books, cheap bid-offer spread. Or cheaper bid-offer spread. That is actually the nicest hybrid I see. And this is why I would say, yes, a lot will switch there, but I don't see everything fully switching there, just simply because of the speed and the amount of blocks. Because I don't know, if you change your if you change your orders in the order book, like, I don't know, in sub-seconds, sub-seconds, that's a really big amount of blocks, and I don't really want to save that blockchain. Yeah, it's like,
I think I always find it difficult to see tech as a limiting factor when we're talking about this range, but I understand, like, it's not there right now. It's not where it needs to be, right? Maybe in 10 to 15 years we are there. I know I said I'll give it to the audience, but I have one more thing that just came to mind, because you all mentioned basically that it's going to be, I think you all agreed that it's going to be pretty invisible to the end user. So the question is then, is DeFi, like, what's the point of DeFi for the end user in the end? Is it not just going to be something that TradFi institutions benefit from by cutting costs, but the end investor, like, doesn't make a difference to them, right? Okay, they can trade 24/7 maybe, but at the end of the day, their on is still through the same intermediaries, and at the end of the day, it's just the same people kind of clapping their hands saying, nice, you know, we saved some costs, maybe we cut out some of the people we didn't like anyways, right? But
I mean, I think there will be less intermediaries, like maybe not zero, but yes, it depends whether or not you see that as a benefit. And then I think improved market access, right? Whether it's 24-hour trading or just for more people, right? So having products available to the masses rather than, you know, just a limited set of people. And then I think, you know, having it be permissionless as well. So I think the benefits are things that, you know, people may not immediately see as a benefit. But I think when you look at the whole growth of the ecosystem for the markets in general, that will be the benefit.
Yeah. Then we maybe should specify it a bit closer, a bit more detailed. It's the question, like, does the financial system, will institutions use DeFi? And there's also another dimension to the question the dimension you just raised. There's also private individuals directly accessing DeFi. And honestly speaking, most of the people, as I said, it's too complicated, I guess. But then again, everything is a function of the maximization of your own benefit, which is, and who has the money will ultimately decide how it is, but not. And then what's the benefit? The benefit is basically the benefit after taxes and regulation. Right. So regulation and taxes, they can change the whole functional. And then the question is, actually, I think that the regulation and how the regulator and how the lawmaker will go on from here on, this will actually decide how it's going to be. Because the strategy I was just saying that I would estimate it between 25 and 30% annually. And I just don't do it. If I would be able to net it, I would just, of course, run it and tax it, fine. But this way I'm not doing this. So this basically means regulation and taxes are shaping what we're doing. And then the question is, how does politics actually, where are they going? And then the next dimension is, even though that, we are only talking about local things. People can still, I wouldn't advise anyone, especially not with the Deloitte logo, I would definitely not advise. People can still just go on chain and just go out of the territory, basically, and then they can practically do what they want. They should not because of regulations and laws and taxes, but they could still do this. And then there's nice, as Alireza, my colleague, said, there are also other places in the world. There's not only Europe, there's Dubai. Argentina might be coming now, United States, Japan and Singapore are super highly progressive. We are in a global competition, and if we make it very unfavorable for our people here, the others might actually get the volume.
BBTR, benefits before taxes and regulation. Nice, that's a good one. we'll coin that. Cool. So I think we have 2 minutes. So if anybody from the audience has one question, I'm very happy to take it. If you have one, raise your hand. You can say it. I'll repeat it for the people streaming. If nobody has a question, then I'll leave the floor to you guys. If anybody else had a final point to add to that.
Yeah, perhaps in the context we discussed, We only, because the topic was TradFi meets DeFi, and because we only discussed financial products and financial use cases. I think where I see DeFi potential is in running non-financial cases, for example, decentralized physical networks or decentralized AI, where we can use decentralized finance to run decentralized non-financial use cases, where we can finance where we can DeFinance can help run as a decentralized physical networks, decentral AI, other decentral energy networks, where we need incentives for the participants, where we need governance token. We didn't talk about these use cases here, but I think these are very strong use cases for DeFi, which remains out of the financial sector.
Talk about it next year. Maybe I'll see you all again here. That would be perfect. Thanks everybody for your time. Big round of applause, please, for the panelists.
Thank you.
Thank you.